What is a tax deed sale? In this video, we're going to show you exactly what a tax deed is, how they come about, and more importantly, how you can make money on this. With this strategy, you can get properties literally for pennies on the dollar. Think about buying a beautiful property worth $250,000 and only having to pay $30,000 for it and owning it free and clear. That's exactly what we're going to show you how to do in this video. Once you understand what a deed is, I'm going to show you and your family how you can get there and get there quick, like within the next 35 to 40 days, okay? That's how quickly, if you pay attention. So pay attention and stick around to the end and I'll show you how to do that. So what is a tax deed sale? Very simply, a tax deed sale, we'll start at the end, okay, is when the county has said enough's enough. This property owner has not paid their property taxes at least in 4 years, sometimes 5, sometimes 6 years, but a minimum of 4 years. They say, we need our money back. So we're gonna sell the property for the back taxes. Now here's the killer. The county is not allowed to make profit on this. So they can't say, we're gonna sell these back taxes they owe on this property. Maybe they owe $10,000 in taxes, but it's a $300,000 property. So we're gonna sell it for no. Conflict of interest, ooh, go away. Nuh-uh, the county can't do that. They can only sell the property for the amount that's owed plus penalties or interest or whatever it took to get it to sale. Well, that doesn't make sense, John. So what if I go in there and I offer them more? They will take more, but they're not allowed to keep what's called excess funds. So this is the amount over the amount of taxes owed. So again, let's keep it simple. If the property owners, let's say, owed $15,000 in taxes, you and I go to the sale, we bid it up to, I don't know, $45,000. I pay the county $45,000, but they're only allowed to keep what's owed in taxes, which would be, in this case, $15,000. So they send the other money back? Not necessarily. The former property owner has to apply for what's called excess funds on that. So again, I bring that up not to get complicated, but the county's really at a great, we're at a great advantage with the county. There can't be any conflict in interest. Their only job is to make sure they collect the property taxes. So there's not a nefarious motivation for hoping somebody doesn't pay their property taxes, getting more money on that. They just want that. All of that excess fund goes back to the other property owner. And you and I get the property for pennies on the dollar. So what's happened in a tax deed sale at a bare minimum? That property owner has failed to pay property taxes for a total of 4 years minimum. Now that doesn't mean that they have to miss property taxes this year. No, if they miss 1 year's property taxes and that just sits there for a second year and a third year and a fourth year and they still haven't paid this year's taxes, they could be all current on these other years, but that one is foreclosable on that. This is how it works. They need their money. It doesn't mean just because they don't pay 1 year, they're not going to pay the other. That's kind of irrelevant. It doesn't really matter. When a property comes up for a tax deed, all you need to know is that person's been delinquent for a minimum of 4 years, because it doesn't matter where it is, and every county's different, every state's different. They say, whatever it is, the only thing, the common thread through all of them is twofold. Can't sell a lien on a property unless it's been delinquent for 1 year. And you can't sell the deed to the property, which means they own it free and clear, unless they've been delinquent a minimum of 4 years. What they figured is this, and this is, like, I wasn't sitting at a table 300 years ago when they were putting this all together and they said, hey, this is what we're thinking. But what the theory behind it is if somebody gets in financial trouble, last thing we want to do is take their property for a few years and back taxes. 2 to 4 years should be enough time to get back on their feet. If not, something's got to give. Okay, we need to get the property back on the tax roll, get it paying taxes, so everybody can use these wonderful services like schools, roads, bridges, fire departments, police departments, all the services that we all enjoy everywhere around the United States. And if you look at the counties and how they handle their taxes on it, it's pretty stark. Like, for instance, you can drive through New York City dodging potholes and all that good stuff, right? You go across the George Washington Bridge into New Jersey, and it's like, you know, Snow White just came out with these beautiful roads and everything's paved and smooth. Why? Because their property taxes in New Jersey are really some of the highest in the country, and it shows within the infrastructure there. I'm not saying that we need higher property taxes because that's a whole different conversation. What I'm saying is that's how it works, but every county out there has them. That's what a tax deed sale is. What you need to do is you need to understand that you just don't go out there and buy a bunch of tax liens on a property or tax deeds on a property. You have to do the research. Remember, okay, when you put your hand up and they say sold, you just brought a property. It better be what you wanted. Okay, you better have your research done. Did they notify everybody that's got a financial interest in that property? In other words, if there was a mortgage or a second or a mechanics lien, or IRS lien, were all of those people notified? If for some reason the county made a mistake and didn't notify Bank of whoever over here, Bank of whoever still has that property as collateral for that loan, whether you bought it or not. So you want to make sure that everybody's been notified. How do I register for the auction? When is the auction coming up? Other things that you need to know is not just when the auction's coming up, is heck, when are you going to provide us a list? I literally was just on the phone with one of my partners and we're talking about some sales coming up, tax deed sales in Nashville, Tennessee. And he says, you know, the funny thing is they haven't even posted the list for the sale coming up, and it's coming up in 3 weeks. Technically, they were supposed to have it a week and a half ago. I'm not going to call them up, hey, you're behind on that. Counties kind of do whatever they want. Sometimes you have to build a relationship within the county so that you have a contact. You're saying, hey, Joe, this is Sean. I'm just curious, is that list coming up? Yeah, we're having some problems with it. There's a blah, 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 whatever that is. Okay. They might even call you up. I've had counties that call me up and, hey, we're good on that sale. Keep your eyes open. The list is coming out in the next 24 hours. Rock on. Because they know that I'm giving them money to run their county. I take care of the property. I do what's necessary to not only make sure that's back on the tax roll, but it's in good condition to either rent, sell, or wholesale, whatever I want to do with it. The last thing is when you look at these properties before you go to sale, you also want to make sure that you have some type of an exit strategy in that. That's also extremely important. So you got to find these lists, you got to find the auctions, you got to make sure you're going to a tax deed sale. There's a lot going on. Here's the great thing about this. Every single tax deed state out there has a different procedure. And you're thinking, why is that great? Well, because that keeps out what I call the big boys, okay? Your hedge fund managers and what have you. And, oh, that's just being paranoid. No, it isn't. Okay, right now in California, Arizona, Texas, and Florida, 25 to 30% of all single-family residential properties that are being bought under that $800,000 mark are being bought by hedge funds. So they can be your competition. With this, because the structure is different for every jurisdiction, there's no way they can get the manpower to make that happen. So profitably, it doesn't make sense for them. You can make huge money when you know how, as long as you got the right people behind you. I'm going to tell you how to get the right people. Okay, I've got a complimentary, that means free, course that I just put together. That's my gift for you for watching all this information going, hey, this is something I like. So follow the steps. I go step by step in a much larger format than we're able to do here and show you exactly where to find the list, when the auctions come in, how to get prepared to make sure you can be on to your first deal immediately. Click on the link down below. It's called higginsmethod.com, and we'll send you out a complimentary course, my gift to you just for paying attention. This is Saen Higgins saying good luck and God bless.